I'm Stan Barnes, and I'm here with Eddie Hatch, and we're Barnes Capital Group. Hello, everybody. Welcome to another episode of Barnes Quarterly. We will hopefully be delivering some information that might be useful to you in your investment and financial planning process. I'm your host, Stan Barnes.
And I'm Eddie Hatch. Well, it's fall here in Tallahassee, and we are starting to wrap up the third quarter and move into the fourth quarter. Football season is rocking along. Hopefully, we will start getting some cooler weather in the coming months.
Eddie's being a little bit modest here. He is a former Gator football player, and they had a big weekend this weekend against Auburn. I also have some Auburn friends out there, and you have my sympathies. But I think Eddie's going to be pretty intolerable around the office, at least for the near future. But we are looking forward to that game coming up closer to Halloween when the Gators face the mighty Georgia Bulldogs, my team. We don't want to leave out the Seminoles. We are happy to see they seem to be getting their act together and have got a couple of wins under their belt. So hopefully that will continue to improve as the season goes on. This is the fourth edition of Barnes Quarterly, and we're still working on the format, but we're very proud to have two guests with us today. Dena Strickland, who's the president of the Big Bend Hospice Foundation, and also a returning visitor, Chris Zaccarelli, who is the chief investment officer of Independent Advisor Alliance, just to give us a market update and kind of put things in perspective as we move into the fourth quarter. Chris, good afternoon. Thanks for being with us today. We're at the end of the third quarter of the year and entering the fourth quarter, kind of the final stretch. Markets have been challenging. They've been pretty volatile, particularly the last week or so. Some key numbers came out, but just kind of give us some of the factors that are coming into play. I know that probably a lot of our audience has seen some of those factors on the news, but if you could just comment on some of the sort of the key points there.
Absolutely, and thanks again for having me back. The key points that are really moving markets right now have to do with trade policy as it relates to the trade war with China, the Federal Reserve in terms of how they're making their interest rate policy decisions, and then lastly, just global growth and basically the economy and how that's been reacting so far over the past few months. And along those lines, last week we had some pretty poor economic numbers. Both the ISM manufacturing and ISM non-manufacturing numbers came in a lot lower than expected, and that caused some growth concerns amongst U.S. investors. We saw a little bit of a stock market sell-off, but that quickly recovered, and people were taking into account the fact that the Federal Reserve has continued to cut interest rates over the last quarter, and they're likely to do so in the fourth quarter as well, as long as there's uncertainty about global growth and U.S. growth, as well as what's happening with trade with China. And that's really the dynamic that's unfolding right now in real time.
I guess one of the things that's relatively new in the overall discussion is the talk of the impeachment investigations. What's your take on how that's impacting things?
That's true. That's a relatively recent development with the whistleblower case that's come out concerning President Trump's call with the president of Ukraine. And so the impeachment dynamic is one that we've seen before, both with President Clinton as well as with President Nixon, with two completely different results. With President Clinton, if you recall, he was impeached by the House. They did vote with a majority to actually send this case to the Senate, where ultimately the Senate decided not to remove him from office. And I think that's a really key distinction between what happened with President Clinton versus what happened with President Nixon. As it turned out, President Nixon actually never got impeached, but the votes were there not only to impeach him in the House, but most likely to remove him from office in the Senate. And that's when he just decided to resign. The stock market reacted very differently under both cases. With President Clinton, despite the fact that he was impeached but later not removed from office, the stock market largely ignored what was going on. In the short run, it may have gone down, but over the entire process, it actually was up around 25%, and that's because it was the late 1990s. There was a lot of optimism around the dot-com and technology bubble, but also the Federal Reserve was cutting interest rates. So I think the main takeaway is not that impeachment is good for the stock market, but that unless a president is going to be removed from office, it's most likely going to look past that actual process. And that's where we are now. I think you'll see if it seems like enough Republican senators start to defect and the votes would be there to remove President Trump from office, I think all bets are off, and I think that would impact the stock market negatively. But in the meantime, I think the stock market's mostly going to look past impeachment and focus on global growth, the Federal Reserve's interest rate policy, as well as what's happening with trade with China.
For our clients and investors in general, obviously it doesn't feel good when the market's getting thrashed around by these numbers that are coming out and political and geopolitical issues that seem to continually crop up this year. But put things in perspective for us in terms of where we are year to date in terms of the market's advances. And, a fair number of our clients are retirees and trying to figure out, is their nest egg safe and what should they be doing through the choppy waters that we find ourselves in?
Sure. If we just use, end of Q3 numbers, let's say, if you look at what's happening with the S&P 500, it's up over 19% year to date. Whereas if you look at mid caps or small caps, they're up double digits, but quite a bit less than that. And then finally, if you look at international equities and emerging markets, they're up even less than U.S. mid caps and small caps. So within a diversified portfolio, I'd expect the equity portion of your portfolio, to be up somewhere around 15% on average, give or take. But the S&P has been up a bit more than that. Now, if you mix that with bonds, then obviously your entire account is not going to be exposed to the stock market. And the bond market has done relatively well this year, but you'll see a mix that's quite a bit lower than that. But at the end of the day, despite all the volatility that we've had, we're still close to all-time highs. We're really not that far off of the record we reached on July 26th at the beginning of the third quarter. But I agree, the volatility has been very fierce last quarter, the fourth quarter of 2018. We've had a couple pullbacks this year already. And so I do understand when investors talk about the volatility that they're facing in the near term. And all I would say is to put that into context and look at, the extreme volatility we had back in 2008, volatility that we've had around the dot-com bubble back in the late 90s, and even going back into the 80s. Part of being a stock market investor is that you're going to have to trade off that certainty of principal, the difference you're going to get by being an equity investor versus owning U.S. Treasuries, with the fact that most likely over time, equities will outperform bonds. Historically, that's always been the case. There's no guarantee that will happen in the future, but just the way the instruments are set up in terms of having ownership as opposed to just borrowing money, the risk reward typically is in favor of equities over the long periods of time. Now, whether or not that holds true in the short run always remains to be seen, and I think that's the trade-off you as an investor need to make in terms of what's your risk tolerance, how much volatility are you willing to go through in the short run in order to that larger return over time. And really working with you, Stan, and is the best way for a client to manage through those periods. And your risk tolerance can change over time. The way you feel about your portfolio moving around while you're working is going to feel different than after you're retired and you're expecting your portfolio to pay for that income. And so maybe that's a reason to go and talk to you and take a look at, where your plans have changed and where your risk tolerance has changed. But over time, you are going to always have that trade-off between volatility in the markets and the potential for larger returns that usually come along with instruments that are volatile.
Well, Eddie and I have had an opportunity to meet with a number of clients, so this is going to set us up for some meetings, this volatility. But, what we've been trying to help put in perspective is the fact that not that there is any kind of recession on the horizon that we foresee, but the market is cyclical, and so there is that possibility out there in the future at some point. But those recessions don't tend to last for 3, 4, 5 years. They tend to be short-lived from the standpoint of, somewhere between 6 months to 2 years. And what we've been trying to counsel clients on is to keep adequate reserve funds available if they went through a rough patch to cover their living expenses for a 2-year period. I mean, they could be more conservative than that potentially. It just depends on the individual. But in that way, they're not hammering their portfolio, their stock portfolio, when the prices might be depressed. They can call on those reserve funds during that 2-year period or less, so that they can weather the choppy waters that sometimes a recession causes.
That's an excellent point, and I completely agree with you. Most recessions, at least the ones that we've seen post-World War II, are somewhere in that 6-month to 24-month range. So that's the typical amount of time that you want to be prepared to not touch your equity investments, and that's the beauty of having a diversified portfolio, which would contain bonds or other cash-like instruments, as well as the savings you may have away from your investment portfolios. And the true key to success over time with volatile instruments such as equities is not touching them during those down periods and waiting till you're back to all-time highs to actually take some money off the table. And that really should be dependent on, what your liquidity needs are. So I completely agree with you, and I think that's great advice, that having the ability to withstand those downturns in the market and not necessarily have to go and sell low is what can help you really outperform over time, but more importantly, get the returns that you have planned for in terms of looking at longer run market expectations. So that's an excellent point.
Well, very good. Well, we know you're busy up there in North Carolina, and I really appreciate you taking time out. Are you starting to feel any fall weather or leaves turning up there?
We finally got a little break in the weather. I know, you'll all laugh down in Florida, but we were in the 90s up until around Saturday, and then we finally got some 70s and 80s. So for North Carolina, it's gotten a little cooler than it has been, but the break in the weather is definitely a fresh relief. Now that we're in football season and we're heading towards October and Thanksgiving in November, it's really nice to have a little bit cooler weather and to get a little break from summer. How about you guys?
We're still bearing the heat down here. We finally did get a little rain, but it's been pretty brutal. But at any rate, thanks again this afternoon, and as always, we'll be talking to you. But appreciate you being with us this afternoon.
Thank you. Great speaking with you as well.
One of the things that we're going to try to do going forward is to highlight some of the not-for-profits or the organizations that are doing good works in our area. And today we've got Dena Strickland. He's the president of the Big Bend Hospice Foundation here with us today. And we, as a firm, pride ourselves in trying to put some of our time, our talents and resources back into the community. And we've been proud to support BBH for over about 20 years and have a long history, and I've certainly been involved in the foundation. Would like to have Dena just tell you a little bit more about Big Bend Hospice and their mission. So Dena?
I would love to, and especially for Barnes Capital. You all have done so much for Big Bend Hospice, and I want to just thank you, and thank you for having me on here today. Our mission, of course, is that we inspire hope. And hope is exactly what we give our patients, their families. And we do this by positively impacting the way our community experiences serious illness or grief, one family at a time. And that's very important because we do that quality care, that compassionate care, and it's not cookie cutter care. It's one family at a time. We give families control over their own decisions in end-of-life care. And if you talk to our medical staff, our nurses, all the way to our administrative staff, we all hold the mission of inspiring hope dear to our hearts.
And those caregivers really do have a special gift to be doing what they do, from the chaplains to, like, as you said, the nurses, caseworkers. They really are a real gift to the community. So Dena, Big Bend Hospice offers a really broad spectrum of services to the community, and some people may be very familiar with some of them, but there might be some that maybe they don't hear as much about. Could you kind of walk through those with us?
Absolutely, yes. So Stan, for the past 36 years, we've been providing direct patient care to those families, which basically shares what exactly it is. It's that end-of-life care. We also, that's been highlighted in the paper recently, provide charity care, providing that end-of-life care for those that could not have it if it wasn't for Big Bend Hospice, and providing their wishes and giving them the array of services that we have for the patients. Some of the things that people may not be aware of is our programs like our music therapy. One of the things it really does is promotes relaxation, communication, and self-expression. And a big deal that it does is that family interaction, so the family can engage, which is beautiful. Another program that we have spiritual counselors that are non-denominational, all-inclusive. They focus on life's meaning, forgiveness, reconciliation, acceptance, and peace. We also offer a Valor program, Stan. We really honor our veterans and believe that every veteran needs and deserves a hero salute. We have grief counselors that are there for patients, are there for families, for after the patient passes. We also go into schools. We're also where there might be a suicide or a shooting, and we have done that recently this year. So Big Bend Hospice is there when you need them the most. We also offer a program that is called Transitions, and this is something that I do not think our community knows a lot about. It's an assessment and supportive service. It's a care coordination service, and it's before you go into hospice care. We give relief for the primary caregiver, have telephone support, companionship. We help with errands, transportation, assistance with additional resources in the community, and you qualify if you are diagnosed with some life-limiting illness. This has been a really wonderful program for people that think hospice care is scary. So it transitions them into, and they see the wraparound services and the compassionate care that Big Bend Hospice provides, and it's just an automatic next step if they do go into hospice care. They're familiar with the staff, they're familiar with our program, and it's been just a wonderful, wonderful program for our community.
Thanks for taking time to be with us, Dena. We know how busy you are, but you're certainly representing a great organization and one that's very high profile, part of the fabric of this community. So we wish you well in your pursuits, and again, thanks for your time today.
Thank you, Stan. Have a great day.
Thanks for joining us today, and we hope that some of the information that we offered will be helpful to you. If you would like additional information on the topics we've covered or have ideas about topics for future podcasts, please leave us a comment below. Thanks for your time today. I've been your host, Stan Barnes.
And I'm Eddie Hatch.
Please tune in next time.
Correction. The registered investment advisor for our firm and that Chris Zaccarelli is affiliated with is Independent Advisor Alliance and not Investment Advisor Alliance. There is no assurance that the techniques and strategies discussed are suitable for all investors or will yield positive outcomes. The purchase of certain securities may be required to affect some of the strategies. Investing involves risk, including possible loss of principal. The economic forecast set forth in this material may not develop as predicted, and there can be no guarantee that strategies promoted will be successful. All performance referenced is historical and no guarantee of future results. The opinions voiced in this show are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult your attorney, accountant, and financial advisor or tax advisor prior to investing. Securities offered through LPL Financial, member FINRA SIPC. Investment advice offered through Independent Advisor Alliance, a registered investment advisor. IAA and Barnes Capital Group are separate entities from LPL Financial.